This is a Stock Trading Reality Podcast, episode 105.
It's easy in programming because when you're debugging and something breaks, it tells you pretty much what's breaking. Well, in trading, when you lose money, you're not real sure what's going on behind the scenes. You're just losing money.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host. He doesn't understand why root canals have such a bad reputation. Clay Trader.
Yeah, so I just don't quite understand. And at the time of this recording, I am currently going through a root canal process. But as far as, maybe it's just my strategy on things, but when it comes to root canals, I hold out until the very last moment where I literally can't sleep at night because my tooth hurts so bad, and I actually looked forward to going and getting a root canal. I've had two now, but in both instances, my tooth is literally just throbbing, so I look forward to it. But as far as, I don't know, I guess I don't understand why they have such a bad reputation. To me, they're very relieving, but the problem is all the follow-up stuff. I mean, you have to get the root canal, and then you have to go in and get a temporary crown, and then you have to go back in for a third time and get the final crown. So it's all those follow-up things that are kind of annoying, having to drive back and forth. But yeah, I guess I just don't quite understand why root canal is always kind of associated with pain, associated with not good. To me, I would associate it with finally being able to sleep at night. So Ches, Ches, by the way, for you listeners, is our esteemed co-host, but have you ever had a root canal or anything like that?
So no, but there is one interesting story when it comes to kind of teeth and dentistry and stuff I have, is that I was under the impression always that, I'll go once a year, get it checked out, and, I'm fine. I take care of my teeth. I brush my teeth, stuff like that. And then I went a little bit longer. I think I went almost 2 years. Like, I never had any toothaches and pains. I don't eat a bunch of candy or anything like that anymore. And before I was actually quitting my job because it was so bad, I went in to get checked out, and they're like, "Oh, we got a lot of work to do. We got like 6 months of work to do." And I was like, "Well, I'm actually leaving in 2 months for that job, so we need to cram the 6 months of stuff in to kind of fix my mouth up apparently." But one of the teeth it's on the verge of needing a root canal, but they're like, I was like, I want to hold off on that just like you. I'm going to wait until I can't sleep at night exactly like you, to the point where I'm going to go in and get that checked out. But other than that, I always make the joke that if at some point, high schools bring people to talk into graduations, if there's ever a time in my life where I'm invited to be a speaker of something, the one piece of advice I would give people and tell these kids to do is floss your teeth, because that was the whole problem for me. They're like, you could have avoided all of this if you floss. So I know it's totally a little bit off topic, but yes, just floss your teeth, brush your teeth, take care of them. But yeah, I was trying to avoid a root canal at all costs, because like you said, it's not like a one and done type thing. It's like a 3-trip process.
Yeah, and flossing, probably why I've had 2 root canals. Like, I'd be lying if I said I was an avid flosser. And my mother-in-law's, she's retired now, but she's a dental hygienist, and I'm surrounded by people that say I should be flossing. And
I've seen the
my trade plan, my floss plan is a little. I'm not good at honoring the stop loss. I'll put it that way on my floss plan. But anyways, we'll move on from our. Well, now we've officially talked about our teeth, so this is good. The listeners are really getting to know us. But so if you have a root canal coming up, I assure you it's not nearly as bad as what kind of the stereotypes are. But today we are talking with a member, Gob, from the chat room. Jody is his name, but we go into his journey, and it's one where he's a go-getter. I would classify him as, and he likes to try to figure things out on his own. But then he shares towards the end a trade that he made with probably money. That was actually the motivation for why he wanted to do the podcast, because it was one that stung quite a bit. And probably not for the reason that you would think, but it was definitely something that everybody can learn from, because it really kind of just slaps in the face one of those slogans out there that a lot of people like to toss around in the trading world that just doesn't make any sense when you really stop and break it down. And his real life example does a good job of exactly that. So I don't want to give anything else away. So let's hop in and talk with Jody, aka Gob, from the chat room. Hey Jody, welcome to the show.
Hey, thanks for having me.
No, we just, before we got recording here, I was trying to ask you about your alias, and I at first said it was COG, and then you told me it was GBO, and then what did I come back? I said it was, so it's GOB. You're like, no, very politely, no, it's GBO. So first off, I thank you for your patience with me, because apparently remembering 3 letters in a row is too complicated for me. But what exactly does GBO does this stand for something? But what does this mean?
Yeah, no, it stands for what? So I kept thinking, how you come up with the same old username, or because I've got a username, that I use for pretty much everything. My email address and this and that and the other. But I thought I'm just going to do something different, since this is different than what I'm used to doing, which is trading. Then I'm just going to come up with something different. But then I struggled, and GBO stands for Go Big Orange, because we're down here in Tennessee. We hadn't talked about that or anything, but
Hook 'em horns?
No, it's the other UT, the actual real UT that's over in Tennessee.
Oh, my! Go Vols! Go Vols!
Yeah, Go Big Orange. So that's one of the sayings around here is GBO, or Go Big Orange, and so I thought, and also if you look at my avatar, I use the checkerboard, the orange and white checkerboard that we have in the end zone.
Oh yeah, that's just classic Tennessee there.
Yeah. So I went ahead and chose that for the theme, kind of thing. So just to be a little different than what.
Where are you in Tennessee?
I'm in Chattanooga.
How far is that from Nashville?
It's about 2 hours maybe, and I joined the Inner Circle after the Nashville trip.
Okay, and so you knew where I was going with that question, because I was about to hop on your case. Why were you not there? But
I know
that would make sense. You didn't quite know about the group until after. For you listeners out there, a little context: we do meet and greets every now and then, where we'll just meet up at a certain different geographic location. And our most recent one was in Nashville, Tennessee. But as you just heard, Jody wasn't quite. He hadn't stumbled across this yet, or at least hadn't made the plunge to join the chat room, so he was not aware of it. But maybe next time. I mean, Tennessee, that's a great state. I really enjoyed Nashville, so maybe we'll get back down there again. But anyways, let's get into your journey. So let's start at the very beginning, as we always do. What got you interested in the markets? Where did you hear about them? And what kind of gave you that push to want to take things a little bit more serious and get a little bit more hands-on? I've always known about the markets, but I've never understood the markets. It took me a long time to really even want to kind of dive into it at all and understand what a ticker symbol is or anything like that. And probably back in 2008, well, actually, let me go back. When I started my first corporate job, probably in about 1999, 2000. They start you off with a 401k, and they're going to put it in mutual funds, and I just pretty much said, okay, you guys match it, I'm going to throw some money in there every paycheck, and it goes to the market, and hopefully, Lord willing, it'll grow to astronomical amounts, and I can retire. And how
I like that you use the word "hopefully it'll grow," because that's a good point that a lot of people don't kind of take into account. And here's the thing: so obviously, most people's introduction to especially if they didn't have any kind of interest in the market prior to kind of starting that job, that's usually most people's first kind of taste of the market. Is you say, oh well, now I have these accounts that are set up for retirement, and someone else is going to put them in some funds for me. And then, like you said, I love the word, the use of the word "hopefully it goes up." Because it is pretty much tied to the market. I know they do diversified stuff, and there's different funds that do different stuff. But generally, match whatever you can, throw it in there, and then you hopefully just let it grow over time. So obviously, your interest definitely, probably it sounds like took more of a kind of an interested person approach to it in 08 and 09. So I'm kind of interested to hear about how that goes, because that's obviously a quite a rough economic time for us. So after you kind of have these 401ks and stuff, what happens in 08 and 09?
Yeah, so I moved around a couple jobs back when it wasn't very popular. Right after the whole 2K, Y2K situation and everything.
Yes.
Oh yeah, that's when I decided to be an IT guy, because before that I was just just the corporate guy, and so I started doing everything that I needed to do to get into IT, and it wasn't very popular because nobody was hiring at the time, And so I kind of made my way to get the experience in IT. Taught myself how to program and become a software engineer and all that fun stuff. And eventually landed a job at an insurance company here local, probably around 2005ish. And so, but anyway, so my 401k, back to it. So I rolled it into the new company, and it hadn't really grown a whole lot. Wasn't making a whole lot of money. Really didn't contribute to it like I should have and could have. And so it was really just hanging out around $4,000 or $5,000. And then 2008 hit, and we all know 2007, 2008, mortgage-backed securities, all that fun stuff. I had no idea about any of that. All I know is that the company that I was with, it's public. It was public, and we went from trading at $30-something down to, gosh, it probably got as low as 7 or 8, and per share. And so I just thought, we're not going anywhere as a company. We're not changing strategies. And so my brain started thinking, once you're in IT for a while, and IT Nate, you can kind of probably relate to this, but your brain actually starts thinking a little bit more around logic. Everything's about logic and programming logic and systematically thinking about stuff, and I thought, so I started throwing the whole market logic around, and I thought, this company, from the fundamental perspective, we're not going anywhere. And my 401k was, sitting at around $4,000 or so, and I thought, I wonder if you can't just take that money and let it all ride on one company. You know what I mean? And so I started, talking to folks that kind of knew what they were doing, and they were like, yeah, you could do that, but
okay, let me just
but you'd be working into the grave.
Yeah, you started to talk with folks that knew what they were doing. What were they doing that made you think they knew what they were doing? That was an interesting statement.
Well, some of these folks were actually the programmers, in our investments group there at the company. Now, I told them I didn't want them to tell me anything that they may know behind the scenes, because I didn't want to, you've always heard about the insider trading stuff.
Well, yeah, you don't want to be showering with Bubba. Totally get that.
Right, yeah. And I said, but from a perspective, I mean, like any company, it doesn't matter whether it's this company or that company, I said, can you do that with your 401k? And they kind of sent me in the direction of, yeah, you can exchange it in and exchange it out, but I didn't understand managed funds and unmanaged funds and indexed funds and all those fun things, and I didn't understand any of that. So the funny part of it is so I go back and I let it all ride, because remember, this is all about risk versus reward, and in my mind, I was already ready to make it up to say, you know what, it's $4,000. If I make money, we're not going anywhere. I can let it ride for a while, and so I kind of made my mind up to just, if I lose it, I lose it. If I don't, then I'm better off, right? So.
Now, you said you let it ride. Does that mean you put it all into one company? Was the money still in your 401k? Define let it ride. I mean, what exactly were you doing that kind of put you in the let it ride boat?
So I did. I learned how to do the exchange myself. So I exchanged it straight to this one company that I was in, and so I invested every bit of it. I put it all on black. Let's just say that. Let it ride on black, and and so the company actually bounced back.
Can you give us the company name, or no?
Well, I don't know. I mean, I guess I could. Is
this the company you worked for?
Yes, the company I worked for.
Oh, okay, yeah. No, you don't have to. Okay, don't worry about that then. I realize. Yeah, we don't need to play in the gray area.
Yeah, it's probably best. But what we did do, or what I did do, is just I put it all on there and let it hang out for about a week, and lo and behold, the company come back probably up to $18, $19, and so I thought, well, hey, I got some money out of it. I'm going to exchange it out, put it back into the managed fund that I had it in, and so I did that, and the stock actually dropped again. So I pulled profits. I took profits out of it, and the stock fell back again, and I did another exchange. This is all within 1 month, which is very important to understand, because with managed funds, they don't like you doing that a whole lot. I got a nasty email.
I was just going to say, I bet you got either some love letters or some phone calls or something, because most of the time they're like, hey, this isn't for trading, you need to park it in here and let us charge you these fees for, whatever funds it's in and stuff. But, what I really want to hit on here is that you got a taste of what trading is like in just that 1 month, though. You literally caught a good spot to get in. You made money on it, and then you actually went back into kind of the managed accounts. But yeah, I can totally see every time we have people who start messing around in their 401ks or their IRAs where it's not kind of at a brokerage per se. I mean, technically the company might be a brokerage, but they're more so, financial advisement companies. When they start seeing you messing around, they go, hey, you're a little bit too hands-on here, so you need to cut back the reins or do something else. So yeah, so tell us a little bit about that love letter.
Yeah. So that's exactly the way they kind of said it. Is like, hey, look, you're not supposed to do this. This is a managed fund. By all means, you can do it in other unmanaged funds, but kind of stay out of this one if you're going to keep doing that. And so I had made. So let me go back when I pulled profits, but the stock goes down. I actually exchange back into that stock. And it goes back up. I pull profits one more time, and when I bought back into that exchange for the second time, that's when I got the nasty gram, and so I just let it be at that point. And but like you said, I'd gotten a taste of it, kind of started seeing what this piece of it was all about, but by no means was more of a fundamental type of trade that I did, because I was, I knew the company. I knew, I felt like this company wasn't going to go anywhere. So, and so I just did what I did. But, I fast forward on, because that didn't give me the itch at all, as far as, because actually I felt like I had done something wrong, by doing that with a managed account and all that. So I kind of, really focused on learning how to program, being a programmer and kind of, making my IT career what it needed to be. So, but
now, are we still? So this was all. Are we? What? Give us a year right now when kind of all this. You got the love letter. Is that still like 2004, 2005, or is that a little bit later on?
Yeah, no. This is 2008 when the market bottomed out, because our company went right with it.
Okay, so you were definitely doing this then when everything was volatile, and so I'm assuming though that was probably a good thing to just leave it alone, right? Because we now know what's happened. Obviously, the market boomed back from those lows. So I'm assuming that your 401k just grew with the market, or did something bad happen at your company which meant everything went kaput?
No, I had actually put it back into the managed fund, and so my 401k, I took it from about $4,000 up to about 19 grand. Is probably what I got it up to, and just left it at that. And so just the normal contributing to it, and the company matching and all that. So, but this was 2008. I left that company in 2009 we had our first son. I've got two boys. One is 8 and one is 4. And so at the time, he was born in December, and so I kind of needed to kind of up my game as far as salary goes. And so I made the jump to another company and to help increase the salary and stuff like that. So, and I love I'm probably kind of jumping ahead here, but the video you just released the other day about the fuel tank is kind of where I am. Having the ability to fill your fuel tank up so that you can trade off of it. And so I didn't really get back into any kind of thought. Well, I tell you what I did do is I created a watch list. My first watch list. Based off of my interactions with the market at the time, I created my first watch list in Google Finance. Google Finance had the line charts, and you could kind of click on it, and interact with those charts. This was back when doing this inside the web, a web page was not, not a whole lot of people were doing that kind of interactive charts and stuff like that. So I thought, from an IT perspective and a web software development perspective, I thought that was really cool. So just in and of itself, I thought, wow, this is a really cool website, and then I'll just create a watch list and kind of keep up with these companies and stuff, and my company and other.
Let me ask this: what was your criteria? What did a ticker symbol have to have going on, whatever, in order to get on your watch list? What was the early criteria early on?
Purely just companies that I knew. Apple. And some of the other companies. Google was on there. Netflix was on there at the time. So just companies that I knew is all. I had no criteria. I had no system, no nothing. I was just like, it was really driven by me finding the website and thinking, wow, this is a really cool website, and it's got charts and pictures. It's like I'd gone back to grade school with pictures with books books with pictures in it. So it's like, wow, this is great. So,
our kindergarten drawings. That's what stock charts can definitely look to people, especially in the beginning. So to be clear, you never kind of went down the path of, I'm going to start looking at PE ratios or all this kind of fundamental stuff. You didn't do any of that, right?
No, I didn't do any of that. So I go back at this point. I go back to get my degree, and I'm getting my business degree. And while I'm doing that, going through your business degree, you've got to learn balance sheets and all the fundamentals that people use to do all these stock trading with fundamentals and stuff. So I learned all this. They made you learn all of it, and I went back and got my master's in business as well. And so I had a double dose of this over the next few years, and once you fast forward to about the summer of 2015, it was really just all business and computer programming, and that's all. That was my life, the business degree and computer programming. And
gotcha. So what I want to know though is, since you had built up this watch list, now did you have money in these tickers essentially, or were you just kind of watching and following them? What was the extent of what you did with that watch list?
No money in any of them, except something that just jogged my memory. I did put money into E-Trade. I did put money into E-Trade, but it was a small amount of money because I had to roll some money over into E-Trade from a previous account, and they would allow you to trade with that money. So I had some money in there, and I think I did buy a stock at one point in time, but I don't think it went anywhere, and I went ahead and pulled out of there and pulled my money out. So it was really just an in and out moment, probably just after 2008, because I didn't know what I was doing. It was kind of scary to have money in there, and I just rolled it over into my new company once they hired me in 2010, because I contracted for a little while, so you don't get the benefits until you're hired on at this company. And so when they hired me on, I rolled everything into my 401k. So I can't even call that really trading or anything. But as far as my watch list goes, I had no money really or interest in those companies. I didn't have enough money to really, I didn't feel to trade with these higher stocked companies or higher priced companies. And so I just kind of let that fizzle out.
All right, so it fizzles out, but you made a great point, and I just want to quickly comment on it. You were scared when you put that money into E-Trade. Is that the emotion that you said you were feeling?
Absolutely. Yeah.
And for you listeners out there, as simple as that may sound, but if you're putting money into a position when you're trading or even investing and you're scared, there's something severely wrong. You should not be scared. What is wrong? There's many things, but listen to your feelings. And I know for us guys that can be a little difficult because I don't have feelings. I'm a man. But if you're scared, that's not what you should never be trading scared. And on the flip side, you should never be trading like, an adrenaline rush either. If you feel like you're on the roller coaster and you're getting like a natural high because you feel like you're in a game of Texas Hold'em, and that's not good either. That's just flat out being a gambler. So, listen to your feelings, and I want to give, Jody, you credit because you were scared, and it sounds like you quickly remedied it by just getting back out, and not only getting out of the position, but if I understood correctly, you took the money out of E-Trade and then put it back. You just totally defunded your E-Trade account, right?
That's right. Yeah, I pulled it completely out and put it into. I just rolled it into like an IRA into the company that I was going into. So
I like that. Good job of acknowledging the fear and just admitting, I don't know what I'm doing. I'm scared. Okay, I'm not only done with trading, but I'm done with E-Trade as it stands right now. So you made the comment things fizzled out. When did things start to, I guess, bubble back up again? When did you start to eye the market again in more of a serious light?
So I've gotten pretty comfortable with IT, and I've started probably about mid-summer in 2015 is about when it all started piquing my interest again. And I can't remember the exact reason why, but I just started, sometimes you kind of just Google search and start looking at things, and having an MBA and the business degree and all that stuff, my mind started getting back into that direction, and so I started looking at fundamentals again of companies, and Google searching and thinking about stocks again, and also I never really had a good amount of money to even invest in the stock market. So getting some things paid off and having some money in savings and that kind of stuff. Once you get to a certain point, my brain started thinking, maybe I can make this money work for me a little bit, but I'm not real sure. I've done it before with my 401k, but what else does it take to do it? So I started asking the Googles, hey, how do you get into this trading?
There it is. I was going to lead the witness there and say, did we go down the Google and the YouTube path? So keep going though. I was going to lead you there, but you beat me to it.
Now these days, you can, if you don't know how to change a light bulb in your car, you can go to YouTube and type it in and learn how to do it. So if it wasn't for Google and YouTube, I probably wouldn't be a programmer either, because that's how I learned and taught myself. So I've kind of got that way of thinking, teach myself how to do it to a certain point, and then find professional help after that once I hit a brick wall. And I've really done that this way in that sense too. So I'm Googling around, and of course, he has figured out how to put his name up there in the search engine optimization. But I come across Tim Sykes, and he started kind of, some of the videos that are out there, he talked about how he used charts to do trading and this and that and the other, and he said the words technical analysis, and I thought versus fundamental analysis, and I knew that what I was doing before was fundamental analysis, and I thought, okay, me being an IT guy, he said technical analysis, you don't necessarily have to have all this fundamental stuff, but that's the way he was trading in this particular video, and I thought, who wants to look at 10 Qs and all these fundamentals and PE ratios and earnings per share and blah blah blah, this and that and the other, and then waiting for their quarterly earnings to come out, and no one, I was just kind of freaking out, so I started searching for technical analysis, and that's when I come across your video. I think it was how to work smarter, not harder, with trade with charts. I think that was the video I come up with yours, Clay, and
that sounds familiar.
Yeah, and so I think I got hooked, with just how you started teaching everything, and so I went to your playlist. You've got the Trading 101 playlist, and I just started down the line, one after the other, and kind of YouTube binged your Trading 101 channel or playlist, and really that's kind of where all this began.
And I'm totally with you. I actually did the same thing because I was like, oh, and it's like multiple hours of, kind of videos and stuff. And then I went down the Clay's live trading playlist, and I was like talking to my girlfriend at the time. I was like, look at what he just did. He just made, $500 on Facebook or something like that. And I was doing math on it, like, oh, well, how am I going to do all this stuff? So I've totally been with you there. So obviously you found something that, obviously, we always advocate this in the same way that, the charts essentially, with what we believe, it's already got all that information baked in. It's just a much faster way to kind of view something versus, spending, I don't know, half hour or however long it takes to read through some of these, 20, 30, 40 page, documents based on kind of fundamental stuff and things like that. So you kind of see the benefits of what charts have to offer. You find Clay and you kind of see what he's doing. You're learning kind of some of the basic stuff. So, where do you go from there? You're going to start using this kind of free information to get your get back in the market, or are you going to take more of a is this the point where you've done your kind of research as much as you could from online sources, and now it's time to look at a professional?
Yeah, I wasn't quite there yet as far as the professional goes. I was like, okay, this guy's on YouTube. He's on the internet. He must be right? He must be telling the truth.
Absolutely. Anybody on the internet, anybody is 100% right. That's exactly.
Yeah. So, I guess I went about it cautiously, but Clay, you're a pretty likable guy. Just the way you kind of come across.
Ches never tells me that, so
I was going to say I don't know if I agree with that one, but we'll save that for another podcast.
Yeah.
Well, let's just say based on all the other folks that I've come across, I was like, wow, this guy's really down to earth. He's got a family. He's really talking through this like he knows what he's doing, and that's me. I've got a family. I can't just go out here and blow money, but he's really going about this in a very systematic but logical way and safe way. So I thought, well, that's pretty cool. But I still wasn't sold as far as like dumping money into a brokerage account or anything like that. And I try to learn as much as I can before I go.
Well, you used the word cautious. I would replace cautious with you were approaching things wisely. Replace cautiously with wisely, and yeah, that's what you're being because it's that's how you should be approaching things. Is not in a hurry like a lot of people out there. But yeah, so you were being cautiously wise. There we go. We'll meet in the middle. You were being cautiously wise.
I guess it's a good thing we didn't air that Lamborghini and yacht commercial we made, Clay, because
that's coming out next week, I think. Yeah, that's probably next week, I think. Yeah.
Oh, all right.
Yeah. So I, all this YouTubing that I'm doing, and probably about August of last year of 2015, I go into work one day and a guy, one of my friends, he pulls out his mobile phone and he has Robinhood on there, and I'm like, what are you doing? And he said, I'm trading stocks. So I was like, okay, so show me this, and he's like, yeah, they don't charge any commissions or whatever. And so I thought, oh dude, this is a big deal. And so so I go back home and I start researching Robinhood, and lo and behold, Clay had a review of Robinhood, and so I watched it, and I thought, well, Clay, he says it's pretty good for what it is, basically. So I thought, well, I'm going to take $300, and I'm going to throw it in there, and then and see what I can do. And now this is where this is where I begin to remember all the crazy stuff that I've done. So my first penny stock.
How did you end up on penny stocks? Did you go down the logic of I have a small account, therefore I got to use small penny stocks?
Yeah, that's exactly what it was, because if you don't go with, if you do the math, it's like, okay, well, I've got to wait, 45 days for this thing to go up $45 if I'm going to make any kind of money. So I thought, well, let's just watch. The oil industry's doing what it's doing at this time. It's kind of up and down, volatile and stuff. And so I thought, well, but mind you, I don't know anything about the whole day trading rule, the pattern day trading rule. And I didn't accidentally find it out either. I actually come across your video before I did anything stupid as far as day trading goes. So that worked out. Or as far as getting my hand slapped yet another time for some sort of trading incident. But
a different kind of love letter where you're locked out of your account for 90 days or whatever it is. So that's good. That's good that you avoided that for sure.
Yeah. And so CIE, it's Cobalt International. I think it's a research company. Cobalt International Energy. It's like it was a research company. That was my first one, and I don't even know how I even come about it. But my friend was into like these oil stocks and stuff, and oil companies like WLL, I believe, was one of them that he was in. And so I just went down that route, and I found one that was close enough to where I could get some sort of return on it if it goes up, like 10 to 15 to 20 cents. I could get $4 or $5 out of it, and because I'm on Robinhood, so there's no commissions in or out, and so I was trying to figure all that out, and so I buy. It was trading at 96 cents, and I bought 100 shares just to see how all this functions and how all this works. But when I was using my real money, again, that whole sweaty palm feeling of like, oh my goodness, because I've got a family. I know it's just $300. And yes, I've heard your podcast with Hooch on, or I forgot who it was, but it was Hooch. Managing your account size, your risk was managed by your account size, and I only put $300 in, so I really can only lose $300, right? So that's kind of my way of thinking. So, but anyway, so the stock goes down to like 88 cents or less than that. And so I'm down like $25. I don't know what the math was, but I was down, and I kind of freaked out a little bit, just within like a day or two, and so I just got out. I just pulled I sold my shares, and I thought, man, this is crazy, the whole feel, all the adrenaline that I felt and everything, and 2 days later, the stock goes up to like $1, 101 or 102, and I thought, man. So hindsight, I was watching this thing go up, and I thought, well, maybe one day I'll get back in it or something. But I kind of got scared away a little bit at this point, and
I just want to. What's fascinating to me is, you can definitely tell you are a very systematic guy. You deal in logic. Things need to make sense. Things need to work in a structured fashion, because I hear, and I was down $25, and I'm like, all right, well, yeah, $25. I mean, and money doesn't grow on trees, but $25 is not exactly going to send anybody to the poorhouse. But yet, a $2,500 loss was just giving you sweaty palms, and you were just freaking out about it, which tells me, it wasn't the $25 that was freaking you out. It was you just had no control over anything. You didn't have any structure in place. There was no true logic. Do you think that's probably an accurate? Now, I'm not like a psychiatrist, so I can't sit here and say that. But I mean, that's what I take away from that, is that $25 was not the freak out part. Is you've known deep down, I don't know what I'm doing, and not knowing what I'm doing is freaking me out. Would you say that's at least somewhat accurate?
Yeah, that's exactly what it was. You learn, through programming. It's easy in programming because when you're debugging and something breaks, it tells you pretty much what's breaking. Well, in trading, when you lose money, you're not real sure what's going on behind the scenes. You're just losing money. And so
I love that. That's a
so
great,
good.
and that was good. Yeah, that's very, very true.
There's literally no screen that pops up and says, well, you bought the top because this, and this, or, you're in the middle of no man's land and you had no reason to be in here. There is nothing like that pops up in trading. That is just a fantastic quote that'll be in the notes for sure.
And this is episode 105, and I mean, this, first, that's why we're learning something new every interview. I mean, somebody has a different way to put a twist onto it, where maybe you as a listener, that finally clicked with you. Maybe the light bulb went off. But yeah, that's so true. Like Chess said, there are no windows that pop up and say, well, you forgot to look at this, that, and the other thing. But had you looked at this and that, that would have produced a more positive outcome. So great analogy.
Yeah, and so I keep plugging away at your videos and stuff, and I come across I've heard you talk about penny stocks and stuff and how crazy they are and or can be, and sometimes you can have some fool's gold with them and stuff like that. But I come across your penny stocks on steroids video, and I'll be honest with you, I was really kind of down with the whole situation, kind of like I was back in 2008 and or whenever it was that I kind of pulled that money out, and until I come across your penny stock on steroids video, and it opened my world up to a whole new world. and so this whole idea of options, and you broke it down so simple in this video, I thought, okay, now it's time for me to start researching options. And I looked at as many options videos as I could, all of yours and folks that made sense about this.
You're talking about free videos, though, right?
For all free videos.
Okay, because I do. This is a scary rabbit hole to go down, the free options path. Holy smokes!
Mm-hmm. Yeah, no, I took it, and so I did take it. I left my money sitting over in Robinhood, and I took another $300 and opened up another account in Options House. So I've learned enough at this point that Robinhood is good to a point, but if you're going to short stocks or there's no option for options trading or anything like that. So I'm like, okay. So I find Options House, and I put money in there, and so I start figuring out. So the beauty of this whole thing with Options House was that there was a paper trading account. So I thought, oh, good. So I finally found I can use play money, so to speak, and learn and get. It was so important to kind of get the function of like actually hitting the buttons and all, because every broker's just set up differently, it seems like, and so you kind of got to get used to placing your trades, your buys and sells and stuff like that. So, but then when you look at your options layout, for instance, the SPY, I didn't know what all I was looking at. The whole in the money, out of the money, that this is shaded, that's not. What is all this? So it took me a little bit to figure some of that out. But I started trading, and I pulled my spreadsheet up back in September of 2000. No. Let me go back. Gosh, it was back. It was September of 15 that I started trading with Options House, and I did pretty good there for a couple of trades, and then I had Twitter and Netflix, and at one point, I was up $5 on one, and I was only doing one or two contracts at a time, and but here's the problem. There were no stop losses. There was just I didn't understand the whole expiration of options yet completely. So I am diving in. I'm getting a lot more confident though, in trading and losing money. So once I lost a little bit of money, I was like, well, there goes $90. There goes whatever, and I wasn't freaking out completely because I was kind of hopping out myself because I had to, or the option was going to expire. And so I hadn't figured out a strategy of it or anything. And Twitter, the SPY, Netflix, all of them pretty much ate my lunch. I was only down like $163, but I realized I don't know what I'm doing. It's just true. And so I finally faced the music, and that's when I joined the inner circle. I said, I've got to start figuring. You remember I told you earlier, I know about when to go for the professional help.
You use the analogy. You sounds like you hit your brick wall.
I did. I hit my brick wall. I realized it, got into the inner circle, and I've actually been very quiet. I've not chatted really at all on the inner circle until I asked you guys in the trading lounge, robotic training or RVR, and that was just a few weeks ago, because I needed to. I was terrible on entry points. I have no confidence in my selection of the stocks. So I was kind of it was like that moment where you sat down with yourself and you have an intervention moment, and you're like, okay, I've got to figure something out. And I've paid attention. I've got a day job, right? So I go back and read the daily chats sometimes. And so I've started, and your new platform, I was searching for the SPY and Twitter and things that I'd already had my hands in on, and you can kind of pay attention to the charts. By this point, I've studied candlestick patterns. I've watched pretty much all your live trading videos. I mean, I've really done a lot of YouTube watching and studying. It's fascinating. Candlestick charts are fascinating, and I actually have almost had like dreams of waking up and thinking of candlestick charts. It's actually kind of sad.
No, my whole life is candlesticks. Like, if my wife is yelling at me, or if we're in a little discussion, I'm like, we got a
steep downtrend.
Yeah, we got an indecision candle right now, and then all right, I got to pull off a hammer right now because I'm getting beat down, but I got to fight back, so I got to create a hammer for. So I totally get it. Like, you stare at charts enough, the whole world becomes charts, and the whole world becomes risk versus reward. So I totally get that. So I was curious, did you go with robotic trading or RVR trading? Because I vaguely remember that. I think you went with RVR trading, right?
I did. It was a quick chat. I was just in there. I was actually working from home one day, and I just thought, you know what, I'm going to hop in and ask the guys and gals what do you got? What would y'all do? Because I'm pretty comfortable with charts. I understand support and resistance. I understand all the fun stuff with charts more so than I need to understand position, and when to get in, when to get out, and how to control my loss. And those are the things that I was struggling with before. And so I kind of said that pretty quickly in the trading lounge. And I think you said if you're comfortable here, or maybe Chaz, it was you that said if you're comfortable with that, RVR is probably better. And then I think Hooch chimed in with #first. So
that sounds like Hooch.
Yeah, exactly. So, looking at the time, I don't want to rush, but where are you right now? I mean, are you in your current state of trading? Are you paper trading? Are you using real money just on a small scale? But fill us in on kind of where things stand at this point in time.
So I'm still on a small scale. I'm paper trading. I actually did put, when the SPY was sitting at 225.50 or something a few weeks ago, right before President Trump was signing all these executive orders, and so I went ahead and got a position in on some options at 225. This is actually why I decided to email you back and say I'll do the podcast, because I think people can learn from this. Because I had one of those moments where I'm looking at it, I'm looking at all the support and resistance of where it's been, and I'm thinking, you know what, it's at 225, it's going to go up just based on everything that I'm looking at. And so I get the position. This is the first time I've traded with real money since my blow up way back in like September or October. And so I'm kind of freaking out a little bit, but I feel pretty good about it. I'd already taken a few of your I've already watched a few of your RVR classes and stuff or videos, and so
you're not even through the entire course yet, though, at this point.
No, actually, right now I'm in the middle of momentum training.
Okay. And as far as this is concerned, you've only taken a couple of the videos, so you're not even through the entire thing. So yeah, no, I think I might know where this is going, but yeah, let's.
I've gone through panic buys, and that's all I've gone through. And so a day goes by, and it goes up a bit. It comes back down a little bit, and then it goes up pretty good. And so I rake the profits at like 70. Well, based on the prior resistance, it was kind of nudging up against it. And I thought, you know what? I'm up $74. I'm going to go ahead and get out now. And so I did. And so I thought, this is good. You know, I'm feeling really good about it. And by the end of the day, it had gone up to 228 something. I left like probably $400 in there. And you say it all the time, Clay. In hindsight, we're all millionaires, right? And I just kept hearing your voice, and I kept rubbing my head and thinking, oh my goodness, what have I done? You know? And so that's when I said, you know what, Clay, I'll do your podcast, because I think people can learn from this in a big way, because, you know, had I done some of what you'd already taught, well, and so it's hard to do this in swing trading, and so I should have put a trailing stop in, and if you don't know what that is, you need to learn what that is. But the problem with it is I put a trailing stop in on Twitter way back when, but I didn't put it in the right spot. I didn't take enough risk on the trailing stop, and so I got stopped out within like 2 cents before Twitter shot to the roof for a while. And so I kind of beat myself there. And this time I actually went in, and honestly, Clay, it was a good trade. I took profits at the end of the day. I did my system. I watched the support and resistance levels, and I pulled the money off. And so theoretically, it was a good trade for that day. I just didn't follow, you know, the golden brick road. I didn't do anything. I just pulled the money. And
you just sold for the sake of selling. You went with the logic that, hey, green is green, profit is profit. You can't go broke taking a profit. But as you learned, you didn't go broke, but boy, did you sure leave a lot of money on that table. But yeah, so thank you for sharing that. So that's a good learning lesson to everybody about why the whole green is green, you can't go broke taking a profit. While that's some very faulty logic, and you know, within managing a train, there's ways to mitigate that. There's ways to overcome that and kind of work with that. And that's what's taught, and that's what really separates just the random traders that are really out there doing whatever versus the people that are letting things work for them, letting kind of milking a trade for all of its worth. So, are you back to paper now, or are you still doing real money? Or is it kind of a combo?
Well, yeah, no, it's a combo because I'm still learning. If an opportunity presents itself, then I'll study the risk, and if it's worth it, then I'll position myself with it. But mostly I'm paper trading now.
How is the real money trading going? It sounds like it's kind of few and far between, but I mean, is the real money account, is it slowly increasing? Is it just breaking even? Is it trending down? What's the status of those real money trades?
Yeah, no, so I'm on my way back up to breaking even on the Options House account. And honestly, I pulled the money out of Robinhood to close that account out. I used that money to start the RVR course. And we'll get into this when you ask me other questions. If you ask me the questions I think you might, I thought, you know what, I'm going to use that money because I actually did trade CIE a few more times because the trend of CIE I started seeing the trend. And so when it would get back down to about 90 cents, I would buy 100 shares and let it go up, a couple days later, and then I'd sell it and get the money. And so I was up like $3 or $4. So I had like $303 and some change. And so I was pretty happy about that. But I went ahead and pulled that money and bought RVR. And that's kind of where I am now. I'm going through RVR. That trade with SPY was just a week ago, or a week and a half ago or so.
Well, I like to hear that your account is now trending back upwards. You're heading back up to break even from where things were kind of haywire. So it sounds like you made an investment into your education, and now that education is paying you back in the sense of it's helping you get your account back up to break even from, all the losses before you had started to, you took that leap of faith in the education. Is that an accurate summary of essentially what has been going on?
Mm-hmm. Yeah, that's accurate.
Excellent. Well, looking at the time, we're definitely have to have you back. As you listeners heard a few weeks ago, we finally brought back our first guest, Sean, and we're going to continue to do that. And, we'll definitely have Jody back at another time in the future. But I know you're aware of this because you've listened to quite a few of the podcasts. So maybe this is the question that you're thinking we're going to be asking. If not, then you can feel free to ask yourself if you want to make a final point or anything. I mean, this is your show. We're just along for the ride. But does your question that you think I'm going to ask have anything to do with the time machine?
That's one of them. Absolutely.
That's one of them.
Yeah.
Okay, so I guess we'll cross this bridge first, and then if you want to cross some other bridges, you just make the call. But Ches has a time machine, and I know he'll lend it to you because he's a nice guy. But if you could go back in time, where would you go in kind of your journey, since you had quite a few start and stop points, and what bit of advice would you give yourself?
I'll tell you what, I've heard a lot of people say it, but it's true. I would go back to before I put the money in Robinhood. I'd do a little bit more search on a broker. I may still actually put the money in Robinhood because of the ability to feel the emotion of kind of get used to the emotion of trading with real money. But honestly, before I would do anything, I would invest more in the education and paper trading. I'd find a broker that had a good paper trading platform with real time, not delayed, time frames, because it's really frustrating. I found one that had delayed time frames, and it messes with you. And if you're not seeing real time data on your pricing, it's really hard to trade that way. And so I would find one with real time charts and paper trade my way to where I am today, honestly.
Very nice, very nice.
I'll definitely put in the show notes as well. We have a few articles on how to paper trade, and some options you can do that include kind of live data, like you said, because just like you said, especially if you're trying to practice options, if you have delayed data, things are going to be so scrambled in your brain you won't understand why something's happening to your options, stuff like that. So yeah, it's definitely key. But what were you saying, Clay?
Did you have one more point? Because before we're going to be moving into the fun questions. So unless your question is not a fun one, what question were you thinking you might hear so you could make a point?
No, that's the last point. I mean, that's the main point that I wanted.
Okay, so you got all the questions asked to you that you wanted to get asked. Is that?
I got all the serious questions out of the way. So
now you're ready for the fun questions. There's nothing else that you want to cover before we move on.
Nope. Yeah, I'm ready.
All right. Well, Here we go. Ches, are you ready to go? Ches, you know what? I'm a nice guy, right? So I'm going to let you kick off the fun questions.
Yeah. So obviously, the fun questions that have been scripted by Clay that I'm forced here to. No, I'm just kidding.
That's exactly it. Ches knows that's what everything depends on, is asking precisely these questions.
And if not, my job is on the line. So watch out, Nate. If you don't do exactly what's said, you're next. What would you say is your favorite movie?
I don't want this to sound like I'm kissing any kind of butt or anything. I'll be honest with you. When I went through college the first time, when the ramen noodles and like all we had was water, anything free was good. When we were roommates with me and a bunch of guys, and we had 3 movies. We had, of course, Dumb and Dumber. We had all the Ace Ventura movies, and then Good Will Hunting. And so those movies that we watched them every night. It just depended on what night it was, and we would literally watch Dumb and Dumber probably once or twice a day. It was terrible. And
okay, well, I have no problem with people saying Dumb and Dumber is their favorite movie since it's my favorite comedy. But the rule that goes along with that is you have to give me a quote to prove that you are an avid Dumb and Dumber fan, and then I'm going to test myself and see if I can complete this scene. So give me one of your favorite quotes.
One of my favorite, I've never looked at a big gulp the same, since that movie, So that was always one where he walked out and he said, "Big gulp, huh? Well, see ya."
All right. Well, see you later. Yep.
Yeah.
Give me another one. I enjoy this game. Ches, just bear with us, okay? Now it's my turn. It's my turn.
Yeah, you do it.
What are the chances of a girl like you and a guy like, what are the chances of a guy like you and a girl like me getting together?
Yeah, see, that's why I didn't go down that route, because I knew I would mess it up really bad. But,
not good. Not good like 1 in 100. Not good like 1 in 1,000. So you're telling me there's a chance. Oh man, I could do this. Oh, we got to move on. So, but yes,
we could. Do
and
this
Good Will Hunting. I mean, that's Ches. You've seen that one, right?
Yes, I've seen that one. I was happy to hear he said Ace Ventura movies, because those are ones I grew up on too. I haven't heard somebody say that on a podcast ever, I don't think.
That's true. Yeah,
those are great.
That's old school. There, I love it. I love it. Anyways, what do you like to eat down there in Tennessee?
Well, we like to eat in Tennessee, but one of my favorite foods is lasagna. I love lasagna. It's basic and yet just really good. I don't know. I've always liked it. And plus, if you can't find anything else on the menu at an Italian restaurant, they're always going to have lasagna, and it's usually pretty good. So it's hard to make that be a bad dish. So lasagna is probably my favorite food.
Man, I haven't had lasagna in a long time, so I might have to start finding a place that makes some good lasagna. But so what do you do for fun and hobbies, kind of outside of the market, your work, and your family life?
Yeah, I kept trying to move the mouse and everything, so I may have got to talking too much. Yeah, so as far as hobbies go, my boys are 8 and 4, and they're both into sports, baseball mostly. So I've been coaching their teams and doing things like that. Our life really revolves around them. To be completely honest, between work and them, I don't have much more time to do anything else except just hang out with them, learn trading, do my job, and just enjoy life.
That sounds like good hobbies to me. I like to coach, and sounds like coaching the kids' baseball team. That sounds like a very enjoyable life to me. So, yeah, for sure. Final question, 3 words, and being the very systematic guy you are, I'm sure you probably have a flow diagram that you use to reach these final 3 words, but 3 words and 3 words that would be used to describe that you would associate with a successful trader.
Yeah, you would think that I'd have a flow chart or something going on here, but I don't. Honestly, the first word I thought of, the Bible says that my people are destroyed for lack of knowledge, and I think that's true in trading too, because my first word is learn. Because if you think you can stop learning now, then you're probably wrong. You're probably going to have the market eat your lunch, and I don't think you can learn enough. So I think that's probably the most important word. Second word I would say is confidence. You need confidence. I learned a lot in my lack of confidence, and as you learn more, you build confidence, and that's important too. But my third word would be persistence. You gotta keep at it. Chaz, I think in one of the podcasts you quoted something from Napoleon Hill, the Think and Grow Rich, and he talked a lot about persistence in that book. I was reading the book when I heard you quote the book, and I thought, how funny is that? But it's true. Persistence is really important in the market and in learning, and if not, you'll get humbled really quickly. I've always said that just when I think that I'm raising my kids and I've got them right where I want them, they come right around and humble me real quickly. And so it's a lot like the market will do too.
I like that. And I think, I don't know if you did this intentionally, but I noticed a flow chart within the words and the order you put them in, right? So your first order is learn, and learn flows nicely into confidence because, like you said, that's how you get confidence is you got to learn, and that's going to give you confidence. And then it's hard to be persistent if you don't have any confidence. If you have no confidence in what you're doing, why the heck are you going to keep on doing it? Why even bother? Because you have no confidence in the first place. So learning gives you confidence, and confidence is going to give you the ability to continue to be persistent. So that's just, maybe I'm reading way too much into it, but that's, speaking of flow charts and the order you put the words, it brought a tear to my eye over here. Ches, you got a tissue?
You're right. You got me.
I can't afford a tissue with these mine shares. They haven't gone up yet.
They're in the mail. They'll be there tomorrow. So, well, Jody, thank you very much. Would you come back? Not if we invite you, but I would love to have you back at some point. Was this, I don't want to say like a great time, but this wasn't too bad, right?
No, this was great. I definitely would love to come back.
Excellent. So for you listeners out there, and particularly the members that are, I don't want to go on. I promise, Ches and I, we say it all the time, the water's nice. We're not total savages. We'll have a good time talking. So thank you again to Jody. Thank you again to Ches, our esteemed co-host. And for you listeners, a final few things here. If you're listening on YouTube, then be sure to check out the rest of the channel. As Jody actually alluded to, there's lots of different types of videos, much more than just the Training 101 videos that he referred to, but there's live trades, there's other fun videos, so check out the channel and get subscribed to it. If you're listening on iTunes or any of the other podcast players, be sure to subscribe, and on iTunes, if you could please leave us a rating, that really helps us out and goes a long way. And then finally, if you're listening on the site, and that's where Ches referred to the show notes a couple of times, so that's where you can find the links to all the different things that Jody and we all talked about. And down below all that, there is a comment section, so if you leave us a comment there, we will be sure to read those and reply. So thank you again to all of you as listeners. Again, thank you to Jody. Thank you, Ches. We will see you all back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.